Thanks, everybody. I've got an awesome panel today. We're going to talk about creating tiered identity models and what that means. With me, I've got Kobina Ansah from ModernLend, soon to be called Credit Without Borders. And we've got Alka Gupta, the co-founder of Global ID. Balázs Némethi, the CEO of Taqanu. And Hayden Simmons, the business development manager for Juvo. So I'll let each of you spend a minute telling the audience what you do and giving them an idea of how identity matters in each of your businesses. So why don't you start off, Kobina?
Sure, thanks. Good afternoon. My name is Kobina Ansah. I'm co-founder and CEO of ModernLend. And ModernLend's an online lender to credit-worthy international citizens living in the U.S. who can't access credit because they lack a U.S. credit history or social security number. This is a problem that resonates specifically with my family coming from Ghana, West Africa, and finding it very challenging to enter the United States financial system, given that they had not had a U.S. Credit profile. So we look at alternative metrics proven in emerging markets to be highly predictive of creditworthiness and lend on that basis. So happy to be here and participate in this panel.
Thanks very much. Alka?
Good morning. My name is Alka Gupta, and Global ID is a portable, self-sovereign identity management platform. Identity is important to our business in the sense that we enable users and people across the world permission to act in particular ways based on their identity. And we form a neutral identity for users to build their namespace, attestations, and then the ability to take those attestations and operate in a given use case around the world. I've always been personally attached to the notion of identity or democratization of access. I started my early days, I spent 20 years in consumer internet and consumer payments, and in the early days it was democratization of access to content or information, democratization to access of payments, and to me, democratization of access to identity is an important place to spend time. So I'm thrilled to be here this afternoon.
Thanks, Alka. Balázs?
Hi, my name is Balázs Némethi. I'm from Hungary originally, and we are a Germany-based company focusing on bringing financial access for refugees and other disenfranchised people. That the problem there is that they are not only generally minority in their country where they are hosting them, but they are such a minority which is far beyond the local minorities, because no country usually look at them as a potential future taxpayer, but as a current problem. And so we want to help these people to access finance and be able to receive streamlined aid money, streamlined governmental support, so the whole system can be a lot more cleaner and transparent, and also to help them to develop a credit history that they later on, once they enter the job market or once they leave to the next country, can bring themselves and prove that they have an identity.
Thanks very much. And Hayden? Do you want to use mine?
Hi, Hayden Simmons. I manage business development at Juvo. We basically enable mobile financial services for mobile network operators around the world. We're in 24 countries and have like 1 million active users a day. And so basically what we're doing is we're talking to mobile network operators, and around the world they're experiencing a very similar set of conditions where it's very saturated, very commoditized. ARPU, their key KPI, is declining. You have all these OTT providers coming in and stealing their revenue, and they have a very difficult time differentiating. And a big root of that problem is the lack of identity of their prepaid subscriber base. And around the world, 80% of mobile subscribers are prepaid, which means that you go down to the store, you put down some cash at the agent, that loads balance on your phone, you go back home. When you're out of balance, you have to go back to the store again. So it's a very difficult process, very inconvenient, and because of this lack of identity and its anonymity, it's hard for operators to offer the right financial service to the right user at the right time. And I'll just say one anecdote real quick. We were talking yesterday with some folks from the GSMA and the UN talking about a lot of SIM card registration initiatives as a means to identify users. But the reality is that just because you have a SIM card registered, you really have no idea that the person using that SIM card is who actually registered the SIM card initially. So I was in Albania, where we're live, and it used to be that you could only have 40 SIM cards per person, which is an insane amount. What do you need 40 SIM cards for? Then somebody started like remotely blowing things up with these SIM cards. So like, okay, well, hold on, let's make it 18. So like now it's 18. Yeah. And so it just goes to show that like a SIM card is not a proxy for identity. And so we help build up those financial identities for those prepaid subscribers.
Awesome. Thanks very much. Hayden, let's start with you. So the way I look at tiered identity is it's a form of progressive identification over time to risk rate individuals. Is that the way you think about it?
Yeah, absolutely. So when we first integrate with an MNO, a mobile network operator, they have this giant population, and they're trying to figure out like, how do we offer the right service to these users? And initially, all you have is an MSISDN. And our core product is a lending product. We lend mobile airtime to a wide swath of their users, people that have smartphones. And so people get an SMS if they have a low balance saying, hey, you can take out a low interest or no interest, no fee loan. Click here to download the application and do so. And we don't care who you are initially. We just care that you have like some tenure with the operator, and we look at transaction records to understand some things about your behavior. But with time, we start introducing you to higher value, higher risk products, going from like borrowing a day or two worth of airtime up to a month and ostensibly becoming postpaid. Then you can actually go through a KYC process so we can really affix an identity to this MSISDN, as well as all the behavior and the engagement in the Juvo managed channel, and introduce you to cash loans, microinsurance, savings products, credit cards, things that require a lot more risk mitigation.
Perfect. Balázs, how do you think of tiered identity in your business?
So our approach is actually like customer first. So the customer starts to start their own identity, and then use that identity to access services. So to work with aid operators and potentially governments later, that they can access the identity which is started to build by the customer, and so they can attest to it, so that this identity can be further verified to proven that that person is a real human being, which is our initial goal, and then to further verify that they are eligible to receive grants, vouchers, and once they receive an actual status as a refugee in one of their host countries, then to be able to use that status paper to further access services within the country.
Awesome. Alka, what's your take on it?
I think tiered identity is critical to further the notion that everybody deserves an identity, or identity, as we say it, is an inalienable right. And so the notion of a tiered identity assumes that everybody has a right to an identity, but because there is a tiered service, everybody has a right to an identity. But what it is they can do with that identity is what we differentiate based on attestations. So those attestations then allow us to say this particular person has these attestations, this doesn't, that would change the tiering of the permissions that person has to act. The actual permission or granting the permission to act for us is given by the service provider. So we are neither making a judgment on that person, we are simply collecting the attestations, which does lead to a tiering and provides an ability for the access provider, or service provider, excuse me, to be able to then grant services based on those attestations. I'll just share one thing. I think it was maybe about 8-9 months ago that Dasha and I were talking about the overall conference and the notion of identity is an inalienable right. And I think the word that came out of my mouth was, even Osama bin Laden should have an identity. And the reason is because it is an inalienable right. The question is the permissions he or she, and in this case Osama, would have. That's where you actually differentiate what it is they would be doing. And that's only possible with tiered identity.
Makes sense. Kobina?
I would certainly appreciate that there's tiered identity in our industry, in our sector, traditional lending here in the United States. Typically, when citizens come into the United States and have no U.S. credit history, they're kind of identity absent or thin file credit, no file credit. We try to use metrics such as employment history, financial transactions, behavioral data, to be able to better understand our customers and kind of level set and give them access to credit that they truly deserve. And as they continue to prove themselves through various level of parameters that we provide them, so through financial education that they can work through, various financial health goals that we set for them, or even adding additional data logs that we can get access to, such as utility payments and others, we help them create a more robust profile for themselves, which allows us to to get more comfortable with extending greater credit lines to them. So they kind of start with a base tier, and as they continue to progress with their usage of the credit line in a appropriate manner, we then move on to increasing their lines or cross-selling them into other financial products that they deserve.
So when we kind of look at this type of progressive identification over time, the users are aware that that's happening, correct? Or is there ways you can incent behaviors from users to allow you to further that identification over time?
Certainly, I guess in our platform, basically, a customer gets access to something we call the Financial Health Center. And unlike traditional kind of credit cards, I would say in the United States, where you don't really know why Chase or Citibank or whoever extends your credit line over time, we make very clear kind of goals, make it very transparent to you, such that as you continue to hit certain milestones, so you go through financial education, what is a credit score, why is it important to you, how do you build that over time, kind of financial health goals such as paying your bills on time on a recurring basis, making sure your credit card utilization is below a certain line, making sure that your utility payments are paid successfully on time. Those all add up to basically points that allow you to unlock a larger credit line. So it's very kind of streamlined, and it really enables a person or empowers them to have control over the credit that they get access to.
Alka, in your business, you're basically acting as a service provider, right? So you're essentially assimilating information from downstream providers who risk rate the identity that you then store in your attestation database, correct?
Yes.
So you're not directly interacting with the consumers in terms of So you're not interacting with the consumers directly in terms of incenting behaviors to be part of this system, are you?
So let me adjust that slightly and then answer your initial question. So we are interacting with users directly in the sense that they do get a global ID. The notion of incenting or educating, as you opened with, is a couple-fold, right? One is we find that building an identity tends to be intimidating in some audiences, and with some audiences, just a invested cost or upfront cost that just feels cumbersome. So the notion we go with is the notion of sign up once and sign in thereafter, right? The idea is that once you provide these building your identity and the reusability of those attestations carry with you such that you are incented to go ahead and take in the upfront cost. But what we do is two things. One is there is a UI that does show how green you're getting or how much of the attestations or how much your identity has been built. So that's one thing to help for them. The other
like
thing
a feedback loop to the
exactly, right? Just kind of a typical consumer user experience type building. But I think the other thing also is to be able to show that there is something that can be done with that with the building of the identity, and that you've saved time in the longer run with building up the global ID.
Sure. Balázs?
So we are using a very strong incentive to actually make people to create identities and not particularly use it. It's just to use the service, which is banking and access to finance, because generally, so we are mainly focusing on Germany and Europe at the moment, we see that, especially in Germany, there is a regulatory change that allows and oblige banks to serve newcomers, those who are already received their status. However, for banks, these people are still seen as bad customers because there is a high chance that they're never going to become paying customers because they have to leave the country. So serving them for 3 years, losing money, and then saying them goodbye is a very bad business model. And currently in Europe, with the zero interest rates, having bad business models addition to your current business is not something that banks are aiming for. So there is a really big gap that's obliged for the bank, and no one does it. So what we see is that helping these people is not an incentive for the banks, but these people want to get into banking, so helping them to create something that can be accepted is very important. And this is the case pretty much everywhere in the world, that local organizations are seeing them as bad customers.
Hayden, what's your take on that?
Sorry?
Just asking Hayden, what's his take?
Yeah, so I'd say that like one of the biggest challenges facing the mobile money industry is engagement, because the incentive structures are not properly aligned. Usually an operator spends years trying to replicate the M-Pesa success by going through all the compliance costs and building up an agent network and getting no objection letter from the central bank and spending millions of dollars on the secure wallet, 40 features, and then they just dump it on an unsuspecting user base who doesn't really understand, like, why should I be using this? My cash behavior right now seems to be working. So instead, we kind of offer an alternative path where we incentivize, basically we reward users for all this $1 trillion a year that prepaid users are topping up with, and incentivize them by rewarding that regular behavior that they're doing every day anyhow, and show them in like a nice little clean interface with game mechanics where you can go from bronze to silver, diamond, or gold, diamond, whatever it is, and move up in advance to be able to access larger loans and then upstream financial services. People love points, and it's really easy to give away like megabytes and SMS. Yeah.
Do you guys find that these kind of behaviors and the incentives have cultural nuances? Because I'd expect, so for example, M-Pesa got adopted in Africa because walking around with cash would most likely cause you to be held up and you'd lose your money, right? So, I mean, do you think that in each of the markets that each of your businesses operate in, you have to deal with these like cultural nuances? In the US market, for example, we know a large part of the cash-based population are Hispanic population that have an intrinsic distrust towards financial institutions. And these are things I'd expect that each of you have to kind of overcome. How do you do that in your business in the US, Kobina?
We are primarily currently serving international students living in the U.S., and over 50% of international students coming to the U.S. come from China, India, and South Korea in that order. And to our surprise, there are distinct utilization patterns between customers. I think a lot of that comes from kind of the financial wherewithal that supports their academic pursuits, as well as kind of their access to financial education. For some, they had a card in their home country and they have a card here, so they are used to using it, whereas for others, it's a very new product to them and they're maybe a little bit hesitant to use it initially. And so kind of utilization rates will gradually increase over time, whereas some feel very comfortable utilizing their lines to a particular amount and paying it down. And so what that does is it impacts our kind of marketing outreach, as well as our focus in terms of encouraging financial education for certain demographics who might be in greater need of it than others.
Balázs, what's your take on it in terms of working with refugees?
I would actually turn it around, because it's not particularly that refugees would love to use cards. It's more that the society is built on using cards. So access to general services in Europe is meant that you have a bank card and a bank account, what you can use for registering you as a customer for pretty much every kind of service. So not having such a card or account means that you don't have access to services. A very easy example is buying a flight ticket. Because when you're an accepted refugee, you can fly. How do you buy a flight ticket? You have to go to the airport and buy a flight ticket at the airport, and then you can fly. Now, we all know that this is not the most
Be a risky behavior, in fact, right? Someone just paying cash for a ticket.
Yeah. So actually, having access is extremely important in this society, and then also, of course, if we start to leave EU, there are a behavior of what form of money is used, or M-Pesa, or is it cash-based society? Of course, it's a different, but in many cases there is more and more electronic money transactions are getting accepted, and if you don't have access to those, your life just becomes expensive. So being poor means you have to spend more money.
Sure. Alka, since your sort of goal is global domination with global ID, right? How do you deal with the nuances as you look at attestation behaviors across countries?
So I wouldn't quite phrase our goal like that at all.
Hey, we're all startups. We're supposed to aim at
as far as I'm concerned, everybody here is a partner and nobody's a threat, and that truly would be success. But with that said, So I'll step back and just some observations, right? As I think about cultural norms, if we may, right? We've spent some time, whether it be in India, other parts of Asia, Europe, obviously in the U.S., and I think, and especially as you think about tiered, there are, whether it be cultural or it be socioeconomic, there are norms where it is more conducive or more comfortable for folks either to, on one hand, for example, in India, giving thumbs or irises or all sorts of bodily related identity is totally cool, right? And much more comfortable.
When people are blissfully unaware of the consequences of their biometrics being stolen.
So regardless of what's happening in India and regardless of how, whether or not you believe in the Aadhaar system, the notion of 1.3 billion people being very willing to provide that type of detail is one cultural norm, if you will, right? And on the flip side, as we've been hearing in keynotes and in other conversations, obviously privacy is very heightened here in North America. And, within North America, my experiences have been more socioeconomic differences, right? So the more financially sophisticated folks are a lot more hesitant with financial documents, if you will, or financial information. And the other end of the spectrum, if you will, are more okay with financial documents and more concerned with legal types of documents. And so I bring this up because those are different type of attestations that you're building up that are associated with an identity. And that then also leads to different services or service providers to whom you have access to. So I do think that there are cultural and demographic differences, and I think it affects tiered identity, and I think the goal should be to make it, if you're truly democratizing or creating access based on your attestations, how do you make that experience faster, better, cheaper in some ways?
So let's talk a wee bit about when we create these tiered profiles, these risk profiles for individuals, how do we ensure that biases don't creep in? How do we ensure from a regulatory standpoint that these new models that we're using to serve the underserved sort of fit financial regulations in these different markets? Kobina, when do you start off?
I guess touching high level on regulation, we specifically do not serve U.S. citizens, given that we're serving demographic that's currently underserved by traditional lenders. So we work within a special purpose credit program, allowing us to do that. In terms of kind of avoiding biases, we use the same metrics to kind of level set our customers that are coming into our pipeline and give them a very similar credit line, and it's from there that their behaviors lead to kind of increase of those credit lines. However, given that we are kind of in the earlier stages, as you've noted, there are some biases that do creep in, so we essentially have to proactively kind of monitor our sizing of initial credit lines and make sure that we are complying with fair lending laws.
So, Kobina, do you actually work with kind of the regulators in this country? I know one of the challenges being in this industry is we have so many different types of regulators, and they don't really have kind of sponsored programs that help educate the regulators about what's happening in the markets. The regulators kind of follow the long tail of adoption in the market, which means regulation lags behind adoption, right? But in kind of European markets and the international markets, we know that governments kind of take a proactive step. So do you work with the regulators here? How open are they to these new kind of lending models?
So I think that we've had proactive engagements with entities such as the CFPB and others, looking at their kind of Catalyst program to be able to support again kind of underserved demographics. Also had discussions with entities at the OCC to talk about what it is that we're doing. But given the scale of what we're doing and kind of our mission, it seems as though we haven't kind of particularly raised red flags. I think the only thing that we've been told to kind of sidestep from is utilizing social media as a core parameter or criterion for our underwriting, which we do not use in that way.
Intrinsically, the funny thing is you'll find in actuarial teams, people actually use the very same social media sites to look you up. Just like you're dating and you want to find out if someone's an axe murderer or not, they actually look you up to make sure you're real or not looking, right?
Possibly.
Balázs, your view on it?
So yeah, in the panel, as the only European company, so there is a really big difference between the US and most other countries, is that the US allows everything by regulations, which is currently not illegal. And in most other countries, you are illegal as long as you are not approved. So working with regulators is very much big part of what we are doing to understand their needs and problems. There is, in financial inclusion, there is a really big conversation between regulators, and they are very actively looking into success stories and what was sort of the need from a regulatory perspective to actually allow such success. I think I have to bring up Mexico with their tiered KYC, one of the first countries that created a tiered KYC system to actually allow anyone more or less to access finance. And then depending on the tier you fall in, your access is sort of granular. And many countries are interested in this sort of problem solving because, generally speaking, financial inclusion is a huge problem related to identity. And it is easy to work with regulators if they are incentivized and they do understand the problem. We might have a pilot with another country which we wouldn't work with refugees specifically, but local citizens. And it's just amazingly a lot easier to help the local financially excluded citizens to access finance, working together with regulators, than working with local refugees who are not citizens.
Right. Alka?
I think two things. One is, at some level, and we had touched on this even earlier in our group conversation, is that I'm not sure we're expecting this stamp of approval from these entities. And so our approach has been more to ensure that we continue to socialize it and keep the entities that you've mentioned as well kind of abreast of what it is we're doing, continually get feedback, such that when it does come to the market or when they do see it in use, it's not a surprise. Whether there are concerns or not, we're open to that, but that it's not a surprise. I think number one. Number two is we are relying more on the service providers to continue to go through the regulatory channels and following that they would traditionally. Because it's important to note that we are not necessarily coming at this and saying, this identity is good for this given activity in a service provider situation, but that this identity, based on the fact of who we know who it is, the attestations that they have or do not have, and the given situation that they're in or the permission that they're seeking, this is the given identity. But it is important to note that difference between us going and getting that approval for given activity versus.
Sure. Hayden? Right in the middle of a slurp there.
Timing. Yeah, I think the regulatory question I think has been answered. I kind of echo what's been said. But on the bias front, just to go back to that real quick, what's been interesting to see is that our product actually performs the same in all of the markets we're live in. So if you peg it to GDP, people are taking out and borrowing and paying back at the same rates and moving up according to wherever they started with the ARPU, the lift, the percentage. We were seeing like 10 to 15% lift, and it's pretty much the same whether you're in Antigua in the Caribbean or in Albania, which is cool. But then my role is to introduce, to partner with financial service providers to create channel-specific products that we then present to these segmented, qualified users, right? And it would be nice if it was super scalable and we could just partner with the same 4 companies around the world. Sure. But the issue is a lot of regulatory kind of concerns, but also like just preference in the market. We see whether it's like microinsurance, how you build the product, or if it's like you were talking about P2P being huge in Kenya, and we manage Tigo Money. It's all bill payment. People don't care about P2P nearly to the same extent. So it really becomes like a product market fit kind of grassroots level kind of exercise.
Perfect. we'll end with this question, and we'll take some questions from the audience. So what would you think is the biggest challenge in getting kind of consumers, the users, across the trusted threshold?
I would say, really for us, it's just being able to access standardized identification documentation. So for us, in a highly regulated space, when lending to international citizens who fall kind of outside the traditional credit box, our lending partners kind of have a lot of eyes on us to make sure that we're complying with fair lending standards. And so, for us, it's just finding, across all the different types of international citizens that come into the United States, a single set of documentation or parameters that are widely accepted, when thinking about various auditings that we have to go through. And so, the reason why we've started with students is because they typically have to have at least 3 different things. They have to have a passport, they have to have an F1 visa to study here full time, and then an I-20 that shows kind of their financial wherewithal to study in the United States. And so this is a great baseline that we're able to use to be able to extend credit to these citizens.
Cool. Alka?
So I think about this answer, and I start with the notion that I think World Bank's ID for D put the number out, and there's various numbers, but what is it? 1.5 billion people have no way to identify themselves, right? And the folks with lack of digital identity is even larger, as we were speaking about earlier. And so the question for me, I can answer it more in the traditional sense as how is it that we're going to get users to have a robust identity across all tiers, but I think the question that maybe we can look at as well is how do you bring those with no sense of identity onto the grid, and the chasm there is not just identity to digital, but then there's the chasm from digital to more robust identity. And so again, I go back to one of the earlier things that we spoke about. I think trying to make it such that the initial investment becomes reusable, scalable, and credible, and making that experience more user-friendly and less intimidating, I think is a challenge for all of us.
Balázs?
Incentive. So Aadhaar wasn't successful just because it was Aadhaar. It was successful because there was a health scheme attached to it so that people can access it very cheap. Sort of moving on this notion, what's the incentive of the customer? It's to access, but the incentive of the government or the aid agencies that the customer, or in this case, refugees, actually financially included, because the disbursement of funds are just so much easier and more transparent, that there is a both side win-win. So sort of we are focusing on this aspect of working together with these
Right, bridging that gap. Hayden?
Yeah, so like the way Juvo works is when you get to diamond status, you go through like a KYC process. But it's not just because there's like a wallet on the other side for the sake of a wallet, but it's like a product that requires a wallet. And so, we piecemeal together, and where there's tiered KYC, we take advantage of that. But, as like a fintech company from San Francisco, we wish it could all just be digital. And so in Jamaica, it'd be great if we could just digitally disperse the loan after having like digitally scanned a national ID card, and it'd all be a couple clicks, right? But the truth is that the current regulatory landscape requires somebody to go in person to a bank and fill out 30 forms with size 8 font. And there's not a lot that we can do on that front to really accelerate things beyond having open dialogue with the regulators and pushing that forward.
Unfortunately, but it makes sense. Hopefully the environment's going to change. So with that, we'll take some questions from the audience for the panelists. Anyone have any questions? Sure.
So I think for those of you who have specific companies, I really like the tiered model. Would you consider, or have you considered, opening it up for other, like I work for a fintech company in San Francisco, we might be interested in accessing your customer's identity profile if they want to choose Stripe, for example. Is that something that you are currently working on?
I think, Alka, you could probably take that, right? That's one of the...
Sure. No, I'd be happy to. So one of the ways when we describe global ID, the elevator version is it's Stripe for identity. So I didn't plant this question, but so one is we'd be more than happy to talk, but more importantly, I think absolutely, and the whole goal is to make this very easy to, via API, integrate so that you have access to the identities for your given users, or your users have access to their global IDs, and that is absolutely the distribution model. I come from the early days of PayPal, that's how we distributed. If you recall, we were Stripe for payments. We were actually before
PayPal
that as
for
well, right? But we were so we've carried that over, and Stripe for identity at some level.
How about you guys? Are you looking at a business model where the data for these populations that are very difficult to identify can be shared in some sort of revenue model?
Yeah, absolutely. We look at it from a couple perspectives. One, we don't want to be a registry. We don't want to be a bureau, right? So I don't know that it'll ever be like purely open and pingable and it's charging on a transaction basis. But the Juvo marketplace will be open for financial service providers to offer their channel-specific products. That's one way. For more of like a B2B to C or B2B to B2C, I guess, if it is with Stripe, there are a lot of relationships like that we'd like to help reduce risk on like cross-border transactions. So there's definitely kind of partnerships that we could talk about.
Go ahead.
Yeah, so like the data won't be like passed over, more like the actual like wherever they are at the verification chain, and sort of with that access to different services will also open up. So definitely there is going to be an API to support local organizations specifically to offer services for these people, because country by country there are different regulations.
Kobina?
Yeah, definitely. It's funny, just yesterday I had a meeting with a large fund that has a lending arm that is interested in possibly working with us, basically leveraging our model as we continue to uncover this highly attractive yet underserved market segment. I think more and more lenders are going to want to kind of get into our market space. And the thing is, because this is a market segment that has historically not been lent to before, there's really no historical data to back test on. And so we're really creating rich data that's kind of proprietary and, through the appropriate relationship could use to kind of, I guess, leverage other entities' balance sheets.
And I can talk about what we do at Socure as well, because we use machine learning and we use historical data. The kind of aim of the game is to make sure that a consumer that's been accepted by a financial institution, for example, that trust is transient. So that means that if someone's been vetted, and I know blockchain ID is trying to sort of attack this problem from a different way with attestation and history, but for us from the identity perspective, regardless of which shard of identity or persona we share, it's ultimately the same person behind the persona. So if you're authenticated and verified once, that profile should be trusted by other institutions as well. So from a machine learning perspective, the goal is to allow the reuse of that information, historical or otherwise, across the industry. Any other questions? I think we've got time for probably a couple more. Go ahead.
Yeah. So what type of authentication or verification do you consider trustworthy?
I'll take this and pass this to the panel. So I think we talked, the panel's about creating tiered trust models to begin with. The notion is that all transactions don't have the same risk profile. So, validating somebody with the minimal credentials, such as their name and email, may be sufficient for certain transactions. High-risk transactions may require other types of validation, whether that's documentary or biometric or otherwise. So I think it's really contextual, and that's why we think of the problem as something that's tiered rather than, one bullet to solve a problem for everyone, one magic bullet. But how did you guys think of the problem? Hayden?
I mean, I just echo that, yeah. It's very product specific, right? So like initially for letting the airtime, all you need is an MSI scan, which is a phone number. And then we look at some background data, but it's not authentication, right? It's nothing that the user is actively providing. And then as you progress, there's like explicit regulations in place depending on the product. So like even if within a wallet, there might be specific regulation, like KYC requirements for the products within the wallet, or mobile money. So.
Balázs?
Yeah, I'm same. Like, I'm not gonna add.
Alka, any different views from there?
No, I mean, I would echo everything. And the only thing is when we think about the attestation providers, to the extent that, there's a robust vetted list of whom those attestation providers are, ensures the quality of the type of assurances that we're giving. Would be the only thing I'd add.
Any other questions?
So, Sunil, I think you mentioned that it was the Hispanic population that has a distrust of financial institutions and is more cash-based. While Balázs, you had noted that refugees sort of have no choice but to participate in a card-based economy. So it seems for financial inclusion, there's a duality of people who maybe want to be involved in the traditional economy but can't, versus those who maybe don't trust banks and other traditional institutions. So in your businesses, what do you see as that balanced? What do consumers, the underbanked and the unbanked, what do they feel about that?
Balázs, go ahead.
So basically, like, if we specifically, I don't know that much about the Hispanic population in the US, so I can't talk about that much. In Europe, you can definitely live without using financial services. There is roughly 120 million EU citizens who don't have too much access to financial services, but it's all their decision to not make it. And the difference is to have your own decision that you don't want to access, and you live in a cash-based economy and sort of in the black market. While if you are financially excluded, it's not your decision, but it's the decision of the regulators mainly who not allow you to access those services. And there is a really big difference between being driven out of the economy or being by decision not part of the economy or the transparent economy.
Yeah, and I think with kind of the population here, the emerging population in the US, one of the fastest growing, the challenge is that the market, because they live on cash, like most of the world, many of them go to payday loan services and so on. There isn't sufficient regulation to prevent some of these people from being taken advantage of with crazy ass, interest rates and so on. So part of it is educating, I think, the population, and then bringing some regulation in so that when you're going through these services, there's financial inclusion always top of mind. So every single service that you go to, for example, instead of paying out in cash, might push you towards a prepaid card or some other mechanism. I think a combination of those two things required to overcome some of these kind of cultural norms. In countries like Mexico, where we have customers, lenders tell us that people take pride in busting the bureau and lending money and not paying the man back. So these are pretty tough problems, and I think a combination of education and regulation will probably help.
Just one more thing to this. There is one thing I know, like the Hispanic population in the US is not fully legally always in the US, while refugees in Europe, they want to be there and they want to go through to be registered and be in the system. It's more or less the system's problem is that they can't always be as fast registered. But like that's a really big difference, sort of, that they want to be part of it.
That's true. There's an incentive intrinsically, and that's a very good point. Any other questions? I think we're approaching the top of the hour, so thank you so much to my fellow panelists. Thank you, everybody in the audience.
Oh, thanks.
Bye-bye.